Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, 14th day of July, 2015, and this is the daily report for gold and silver. We do have gold prices moderately, nominally lower this morning, off about $1.30 on the day, 1154.10. That is our current print off of COMEX. We've seen it trade to a low of 51.80 and a high of 59.10, so a very, very tight range there. Of course, we're still trading in FX gold, hasn't closed yet for the afternoon break, 1155.21. Putting it down about $2.5 on the day. Low 53.14 and the high 59. Again, a very, very compressed range on the day. Finally, let's take a look at silver. Silver is also off about 13 cents, 15.32. It's traded to a low of 23.5 and a high of 48. More on silver in a little bit. So traders, in terms of the fundamental news out there, of course, Greece and the European Union have come to an agreement in terms of the debt restructuring, but the devil is in the details, so to speak, and we'll have to see how that pans out. We had a successful negotiation with Iran, and a nuclear deal is now apparently in play, but I believe the big news right now is in terms of gold itself. And we'll talk about oil in a little bit because we have seen an effect today, is the fact that we do have Yellen. She will be speaking on Wednesday, and it is her semi-annual appearance before the U.S. House, and that's where she talks about different monetary policies and kind of reiterates what we hear pretty much in the minutes in each month during the Fed meetings themselves. On a technical basis, though, we still see this market under pressure, especially if we get a clear signal that we'll see some rate hikes, or the onset of rate hikes, I should say, in September. I believe that would also be bearish. When we take a look at our chart and we're looking at a daily chart, what we see is as follows, and that is that we feel that there is some real potential for some more downside pressure. It's based upon a couple of things. First of all, our Elliott wave count, and second of all, clear fundamentals at play in the marketplace and really how they are kind of panning out. Now, we have this extreme low right in here. Let me try to draw it as straight as possible, because these are the different levels that we have to see if the market continues under pressure, if in fact it's going to hold. So 1140 is a pretty critical area. We've got that here, and you can obviously see that's a conclusion of wave 3 here and this bottom that was in place. We also had this low. This low came in last year, and it is our lowest low since the market has been coming down at around 1920. So we're certainly coming in and threatening these particular areas. When we take a look at the marketplace itself, there's no doubt we've had this downward bias, and I don't really see a real reason for that interim and long term to kind of deviate. Now, short term, of course, anything can happen in the market. And as we look at our current count, we've concluded 5 out of 5, but you can see occasions where you'll get a continuation of the market moving lower. And as you do, you repeat that 5 count, 1, 2, 3, 4, 5. And in essence, what you're doing is you're looking at a micro view. In other words, you keep subdividing that count as long as the market remains under pressure. Now, we're currently sitting, as I said, at about 53. So it's a very precarious position, because if we take a look historically speaking at other points that the market was really at this area, we really have to take our eye, and the only low that I even see that remotely covers this particular area is this extreme low that came in December after the market, of course, had come down, tested this new low at 1120, comes back up roughly to 1220, and you can see this tremendous move here. And that's that move, if you recall, that happened right around Thanksgiving. And so that is I believe, an aberration in the market, but nonetheless, this is the only low that really matches our current position. In other words, I don't see on a technical basis any real support in the market, at least not in this area, at least not till about 1140. So traders, yet another way to take a look at our daily chart is I have put up a daily chart, and this has been converted to a Japanese average chart. You can see, excuse me, quite a bit of difference. we do have, without a doubt, I've still got these channel lines in, so we have a defined downward bias, a downward slope. We've had that ever since this market has been at about 1200 and has been breaking lower first. Secondly, we had a couple of days just prior to this where we had the market potentially pivoting, but we got what I tend to call that false positive, in that we really didn't pick up any steam and now have gone back to red. So on a technical basis, once again, that's another real reason that I think we could see some additional pressure in the market. Lastly, what I want to look at when we talk about the actual downside target that we have, really what they're doing is they're basing it upon 3 to 4, and then 5 should absolutely go below the low that we received in 3. Now realize this low that we received in 3, this is that record low that we got this first part of the year when the market touched down at around 1140. We have that one other move at around 1120. So what the system is really looking at is the potential for the market to trade to roughly just below 1100. That is where I think if we see this market continue under pressure, I think that that's where we should wash out much of the short plays in the market and could find some support. On a technical basis, as I said, we have to see if the market continues lower, how it reacts at 1141, and then, of course, how it reacts at that other extreme low, which is right down here, and that comes in at 1131 in terms of where the tick comes in itself. So those are the two areas that we want to look at. We're trading roughly 1155, so $15 to $25 lower is what I anticipate within the market and gold prices in the near future. So traders, we once again are looking at silver under pressure, trading off, as I said, about 12 cents on the day. I draw your attention, this is a half a day chart. It is in Japanese average format, but I think that what we're looking at and can really clearly see in the market is this little clip up. I'm looking at this last couple of trading days in which we saw the market break well below 15 right in here and then trade back up to around 16. So we had this tremendous spike. But if you look at what's happened at the beginning of the week, realize it's Tuesday. These are half-day candles, so this is the beginning of our trading week. You can see that they've gone from green to red, very, very small body, very indicative of the kind of pivot point you will tend to get at tops of markets before tracking lower. Again, our initial projection on this marketplace was roughly at around, call it 1510 to 1516. Market's at 34, that's right here. So I'm still looking at this as having some potential in terms of a support level should the market continue to trade under pressure, but my sense is that what we will see is a lower market if we also get gold trading lower. It seems as though they're back to really tracking well in terms of tracking in tandem as we look at these markets. So this would have been a really solid point to get short this market. At this point, I want to see if we have any follow-through. If we do, we're probably headed back below $15 in silver, and especially if we go into the 1100s in gold, we would certainly see that kind of pressure in silver. This has been Gary Wagner wishing you, as always, good trading. Talk to you tomorrow for another daily update and review. Bye-bye.